I'm having some trouble with my audio. Sorry about that, Anthony. Sorry about that. I got you.
Yeah, I can hear you perfectly. This is great.
Yeah,
Yeah, no,
sound good?
that's what took me 60 seconds there. So I saw you in there, and we
No problem.
appreciate you. So all set and ready to go. We like to keep the podcast a little informal, so these startups, when we start with something like this, it just helps set the tone. So
Perfect.
thanks for jumping on with us.
Yeah, that's great. I myself, I'm heading to Boston with my daughter for a volleyball tournament, and so
Don't do
I
that, Dr. Rick.
I know. So, but she's our all-star volleyball player, so we're excited to have the tournament this weekend.
Yeah, we had
And I know,
somebody else jump in, Rick. Is that planned or?
He's on my side. I think he might have clicked the link.
nice.
All right, I'll remove in case if he wants to come back. Jeff's welcome anytime.
It's fine. I'll tell him to hop on the normal link.
Yeah, just have him jump on the LinkedIn. So the
Yep.
one thing, Anthony, your camera angle is
How's that?
Yeah, we're good.
That's much better.
I mean, he's in a car. He's in a car while he's saying this, Anthony. So you don't really.
It's all good, and he's got his rear wiper going in the bright blue Boston, Massachusetts sun over there.
That's right. Exactly. Where are you based, Anthony?
I'm in Florida. I was up in New York forever and moved down to West Palm, I don't know, like 3 years ago. COVID baby, family's down here, so yeah. It's nice and warm over here.
Yeah,
now,
so
Jeremy,
you see the sun a lot.
No, Brock is going to join us, correct?
Yeah, as far as I know.
Okay, good. Well, why don't we go ahead and start just from the top, just as we typically do, and then
we're live, man.
We'll cut Brock. Well, that's good. Well, just for those who are just jumping on, this is Real Fridays, and Real Fridays is a show driven by industry experts to drive just a real conversation around what's happening in the mortgage business and housing and real estate. But most importantly, we skip the marketing fluff. So we drill right into really a value proposition of a product or sort of real talk about what's happening in the marketplace. And this is why, I was excited to have Anthony on, because especially on the heels of their announcement between Figure and House. And House is a partnership I tried to put together when I was at Cross Country, and it did not work. It was not successful. So I was pretty excited about when that announcement came through. I immediately reached out to him because I've respected his career, and I even respect obviously the crew at Figure a great deal. So I was really excited to be able to reach out to him yesterday, and then also just say, hey, I'd love to have you talk about what Figure strategy is and partnerships, and I'd love to talk about a whole host of things about Figure, as I know Jeremy would as well, because Jeremy's very familiar with the Figure as an organization, and Mike, and God, the trailblazing that guy's done. And then now you have Mike Tenenbaum, who's just joined as head of the mortgage division. What's his strategy? He's CEO of what, Anthony?
So we have two businesses. Like there's Figure Technology Solutions, which is what you colloquially would know as like the lending business, the HELOC, all that, and that's what Tenenbaum sits on top of, CEO of that. And then we have our Figure Markets business, which is more the, marketplace of everything, blockchain based. We've got a few things that we're rolling out there. Matter of fact, we just launched SEC yield security approved, which, actually provides yield on an actual token. So it's pretty exciting stuff that they're doing on that side too. And, we obviously interface with each other, but for purposes of this call, we're talking about technology solutions, which is the lending business, the HELOC, those things.
Oh, that's
right on.
That's good.
Yeah.
Jeremy.
So why don't you say a little more? Because I'm not sure I saw the announcement with House. I mean, I'm familiar with both Figure and House, but what's the nature of the partnership? What are you guys providing for that?
Yeah, sure. So if you look at Figure sort of big picture, right? When we came up with the HELOC, the beginnings of this product, like most products that we learn, are direct to consumer. The idea is let's go to market, let's see if there's scale, see how consumers react, optimize the product, etc. And then to the extent that we find a product that we think has success in the market, our core strategy is actually to get volume and traction and market share through partnerships. The majority of those partnerships being mortgage companies. Something in the vicinity of like 75-80% of our production is coming through originators, be it wholesale or correspondent. Yep. House sort of sits in the other side of things, right? On the direct to consumer side, where, you know, strategically, we've built a pretty delightful online experience to take a HELOC, and obviously that dovetails nicely with what House is trying to do. They are obviously a digital provider. They are helping consumers think through options on their home and stuff, and a really elegant way of addressing that and the cash needs that might be required for a project are through a HELOC. Historically, you know, a lot of folks are taking personal loans at pretty high interest rates to do this, and that was really the genesis of the HELOC. And in today's market, with the amount of equity that exists in homes, we think it's just a perfect way to access and tap that equity to accomplish whatever goals you have. One of the main ones being home improvement, obviously.
Yeah, right on. I mean, that's I think a nice fit for, especially for mortgage lenders to understand, which building out your own HELOC is a very big process. Plugging into a white label experience or a delightful experience or whatever else makes it a lot easier. And then, you know, the tie into home improvements, just cherry on top. Hey, Brock.
Yeah. That's something like we sort of ask a survey question, right? When a customer applies, why are you taking out this HELOC?
Sure.
It's not scientific. It doesn't tie into underwriting or anything. But what we see is something north of 40% of consumers that come to us tell us that it's for a home improvement project, one way or another, an addition, a remodel, whatever it might be.
Yeah, it's a brilliant mix. That's a brilliant fix, you know, or a brilliant sort of move, because I know that another one that might be an interesting opportunity for you guys is Pinterest. Pinterest, a bulk of their inquiries on the Pinterest platform is on home improvement, because what do people do? They go online to look at design ideas for kitchens, for bathrooms, for living rooms, for landscaping ideas, you know, and I haven't really seen any meaningful adoption from a lending standpoint on Pinterest. And I know that's a very analogous kind of opportunity for an organization like yours. But we have to pause just for a second because we're really happy to have Brock join us. We feel like Brock is always on time, and yet he's late today. So, Brock, why were you late?
Not only did I tell you guys 3 times, but at least I closed the deal that I was working on and told you I was going to be late because I was doing it this morning. But
good.
Hopefully Anthony forgives me. I know Rick won't drop it for months.
I mean, if you close the deal, the deal, you're forgiven. If it didn't close, that'd be a different story.
If I wouldn't have, you know, that would have been pretty offensive to you guys. But
well, can you announce it or what? Can you actually say who it is or no?
No. But,
is it a credit? Is it a credit union, community bank, IMB?
It's a bank.
Big deal, huge.
It's a bank.
Big glorious deal. It's a huge deal.
National bank.
Dude, that's fantastic, Brock. You've been killing it on your partnership side as well. So this is great.
But now I'm excited to be plugging into the conversation. Hopefully, you guys didn't cover anything too good without me.
Always.
I think we're done, right?
We're always moving. That's it.
Exactly.
Online HELOC for home improvement. Sign up and go. Let's go.
I wanted to comment on what Rick said, right? So Pinterest would be another good example. And those are sort of the digital, the digital places where consumers would go, where there's a natural fit for a HELOC. Yeah. And you can even think of some brick and mortar versions of Pinterest and or House or whatever, like, you know, Lowe's, things like that. But, you know, that's at the enterprise level. And I think we're uniquely positioned to work with them just because we have that online presence and are able to provide that experience directly to their consumers. But, you know, for those folks in the mortgage industry, I've seen some really cool applications of our product, even with the local LO. So one of the things that I was super impressed with in our partnership model, every LO that has access to our system, remember, it's white labeled, they get a personalized link. And any consumer that clicks on Rick's link applies with Rick and gets a loan through Rick and so on and so forth. And that link is static. We saw an originator that printed out business cards with a QR code with their personal link on and went and handed it to all their local pool guys. It's brilliant. Yep. Pool guy hands it out. anybody that scans that QR code is applying for a HELOC on the spot and, you know, gets an offer within 30 seconds.
Wow.
Or not. But so my point is that, yeah, you know, the house partnership is fantastic, but you can take that same concept and localize it to the same referral network that any LO uses. Find your contractors, your local guys, find the roofers, find the pool guys, and, you know, you can give them an option to start getting some leads in to help those consumers get a loan if they're interested.
So why wouldn't you partner with, I don't know, Class Valuation or some organization to do exactly just that, so that every appraiser in the country would have this QR code or this link, so that way they could literally do an appraisal and then say, hey, here's all these things I would fix here. If you're short on cash, here's a QR code, scan it, and then you can get a HELOC to be able to address X, Y, and Z, or every home inspector in the country or something like that.
I mean, I have a good idea. Actually, we're going from a different perspective, but like, yeah, that could work.
Yeah, man, it's all about access to the house, Rick. Like the fact that you would have to convince them to do the inspection or convince them to do the appraisal to get the value. The person who's standing there at their door or has been invited in to do the pool, to do the patio, to do the renovation already has access. And I think, like, as you think about it from a digital LO perspective, how do I get access to the home? How do I get access to the customer? Unless you're calling your existing book of business to add the HELOC on, you got to go out and do the business development, those referrals that Anthony's talking about, to get as close you can to access to the house. Otherwise, you're basically going door to door.
What's interesting is what Anthony's working on is such a next level way of driving unit volume to a mortgage company, and it's beyond. It's, to me, the industry is just littered with simpletons, in the sense that, like, we have sales professionals that think very linearly, and they think very traditionally based on realtor and builder, and then it's like repeat, and maybe tax, advisor, financial planner, divorce lawyer, repeat, and there aren't these tech plays. Nobody does this well. The only company that I've really seen this do well is probably Better. Better does a great job at this. And I think Figure does an excellent job at this, but nobody does it well. It's always been mind-boggling to me when you get these guys who are head of retail production, and they have no innovative ways of growing production other than, the mud fight of recruiting loan officers, or the complete disaster of doing MSAs, or fighting over, joint realtor relationships, or whatever the case may be. It's like, this to me is a far more integrated, elegant, scalable way of growing production, and nobody does it well.
What's the Anthony, what's the benefit? So, like, one of the things that's always plagued HELOC from an IMB perspective, loan originator perspective, is the revenue split between the company and the originator. So, like, if you could talk a little bit about, like, is this good for the company as well as the originator, or is it really just for the originator to play defense?
Yeah, look, I don't want to turn this into an infomercial, right? But I think if there's one thing from an originator standpoint that we pride ourselves on that I think really differentiates us, it's this. This isn't an old school HELOC that you ask the consumer, how much do you want? And then they take a rainy day loan and don't draw it down. Our product is fully drawn at origination. So as you can imagine, now that it's fully drawn, there's some revenue to share because it's an actual loan. The other part about it that I think is really attractive for an originator is that we do 100% of the fulfillment. There is no cost to the originator. We pay fixed economics. We can negotiate what that number is. And once we pay those fixed economics, obviously the originators can share that in whatever way they see fit with the LO. And so there is money in. And the final point that I'd say is that, in my experience, given Rick's commentary on LOs, it really boils down to a single metric, right? How much time do I need to put in to make this loan happen, and what am I going to get for it? And while HELOCs are lower average sizes, ours tend to be 90 to 100,000. I think where the math really gets exciting for a loan officer is the entirety of what they need to do is send a link out to the borrower. That's it.
Sure.
From that point forward, it's consumer driven. There's no conditions, no steps, no nothing. It's a yes or a no. And, we're going to hear some stuff that, it's an automated process. So we probably decline a little more than we'd like to. And we're working on that. But at least you get to a yes or no within a minute. And even if the answer is a no, at least the originator learned a few things about a customer and can offer them up some different option. And so that is where I think we win, right? There's revenue to be shared. It's not a lot of work to do it. And it's a quick process to get to a yes or a no, so it's not dragging on forever. The other thing that I'd say, and the smart originators should figure this out, most of these customers, obviously, if they're taking a HELOC, they probably have a nice low rate mortgage in the 3s, 2s, whatever from a few years ago. When you put a HELOC on top of that, you're raising their average interest rate on the combined loans, which not only increases the likelihood that they'll come back to you for a refi when rates drop, but it actually accelerates the point that they're in the money. So you're getting paid now to help a customer achieve one of their dreams, home improvement, whatever it might be, pay off debt. And then you're actually accelerating the point they're in the money for a refi. And you could bet your bottom dollar they're going to come back to you if you were there for them when they needed help and advice. So, there's not too many win-win-wins in mortgage. I actually think that we're fortunate that we've found one that really is fantastic for everybody, for the originator, for the customer, and for us.
Yeah.
And the loan office, from the consumer experience standpoint, you were mentioning that it's pretty branded to the loan officer. It's pretty, it feels, it continues to kind of feel like their experience, and the loan officer gets the details after and the updates after and things back, so they can track it to some degree of when to go back to the client for a refi or whatever, like you were just talking about.
Yeah, look, it depends how we partner, right? If it's, if somebody's just brokering a loan to us, it's co-branded. We can't fully hide the Figure brand. I mean, we are the lender in that case, but most of our relationships are correspondent. And in that case, it's not even a Figure loan. It is actually whoever loan, right? Whoever the originator is. And so it's fully white labeled. And the LOs, I guess my point would be an LO can be as involved as they want. If they want to actually handhold and upload an ID or whatever on behalf of a customer, we support that. If they don't want to invest the time and they want to let the customer drive, they'll get 3-4 emails from us as an application goes through the funnel. We'll let them know, okay, the customer picked the product, the customer has completed, income verification, the customer funded or was declined. So we send that data back to the originators, but how much time they invest is really up to them. We've seen models that are very, very hands-off, and we've seen models where, our originator believes in no customer left behind, and they want to make sure that, if it doesn't work out with Figure, they go back to them with another option, so on and so forth. That's the beauty of it, right? You can kind of implement it the way you want.
Yeah. So where does it go from here? I mean, is it, you expect that the size of the first lien mortgage market is essentially the size of the Figure or the HELOC market by unit? And then, like you said, it is a draw accordingly. Do you think you have that many units, or what happens next?
What happens next? Well, this is where it turns into my opinion a little bit, right? And this may not be super popular, but I think it's a little self-serving, but I think we're in sort of a range of interest rates right now that's likely to stick around for a while. I don't personally see rates dropping or increasing too much from where we are. And given the amount of equity that's built up in homes and the, percentage of loans that are in that 2-3-4% range, I think HELOC's got some runway. That's my opinion. However, at some point, the market will change. We could debate whether that's next year, the year after, in a few months, who knows? I think from Figure's perspective, what we're looking to do is take that same philosophy of automating the underwrite, figuring out how to cut as many steps as possible in order to make it a better, faster, cheaper experience for the customer, and apply that to additional products that might be suitable. a notable one that I don't know if we fully announced it, but we are launching like a DSCR product shortly. Same philosophy, right? That's ripe for automation, and you can do a lot of things.
That's so smart.
In the non-QM space, right? So that's going to be our next foray, right? And then as the regulatory environment changes, we're obviously going to try to expand as much as we can into additional products and use that same approach towards creating a loan. And I hope what's clear through all this is that our objective is we want to enable originators to use this efficiency to do more business. I think the world of the advice that all these LOs are providing customers. We're not trying to replace that. The reason for the house deals and things like that is I think that is business that for one reason or another isn't going to an LO to begin with. And so we're doing our best.
If anything, you're trying to get the LO paid faster, and to provide them with just a wider array of product that otherwise that most IMBs wouldn't have access to, right? Because IMBs aren't really known for HELOCs to begin with, but you guys have enabled that market penetration to compete with credit unions and community banks, and the typical outlays of that product in a way that IMBs in the past haven't had. So I think that's really, I think it's smart. What would you say to be let me ask you this: as rates go down, the HELOC opportunity just increases substantially, right? So you'd think that like the HELOC market, I mean, if you could go to your local community bank and get a HELOC in 45 days, or go to Figure and get it in 7, obviously I would say that there's a tremendous amount of upside and market potential for the product. Do you know what your market share is in HELOC right now as an organization?
I mean, look, like all mortgages, right? I think the absolute number probably isn't too impressive. I'm sure it's like low single digits, although we're the number one non-bank HELOC lender, and even in absolute terms, I think last I checked, we were number 5 or 6, even when competing with banks. But it's really fragmented, right?
Yeah.
So there's a lot of opportunity.
Yeah. So that's kind of my point, is that there's a tremendous amount of upside, even in this space to begin with.
Yeah, and I think the banks and credit unions play their role. We speak to them too about partnering with us. I genuinely view what they offer as a different. Yes, it's a HELOC, but it's a different product than ours. One is there more as, call it a secured credit card where you can draw it down and use it however you want. Ours is very purpose-driven.
Yeah, it's very project-driven.
Addition, right? Or like there's a purpose. I have all this debt. My advisor told me I should pay it down. I want to do that right away. Why would I wait? That's sort of the consumers that we see. And you'd be surprised. Like there's the amount of things that we hear from our clients that they do, buying a boat, medical, dental work, like you name it. If it's a big ticket, some people think this is the best way to get it done.
Yeah.
So that's kind of the origination side. I guess the other part that perhaps folks aren't as familiar with, we also have a pretty deep capital markets ecosystem where we've built a marketplace, what we call Figure Connect, to enable our originating partners to sell their production directly to the investors, thereby participating in the gain on sale. And that's where we are sort of a fintech and want to provide the technology that backs all of that up. We're not looking to be the biggest lender in the world. We are looking to be the engine that powers all that production in a standardized, consistent way that enables our originators to sell to investors and benefit from that capability. And part of the real secret sauce there is the fact that what we hear from investors is they love the fact that one of our loans, a loan that's gone through the Figure system, it doesn't matter if it came from Cross Country or Movement or New American or even Figure, they all went through the same process, no exceptions, no anything. So they all look and perform identically. And so that creates efficiencies. On the originator side, again, there's no kickbacks of loans or anything like that because they all went through the same process. So there's a ton of efficiency that we're trying to create in that marketplace and help originators benefit from it.
Yeah, I mean, it sounds like at that point you have the traditional LOS and closing platform all in one. And so you're really a technology provider. at that point. The lender's paying you just for the platform. They take, I suppose, the customer service disclosure risk using your technology, and then they deliver. I mean, I think there's you have a couple of competitors in that space, but like that's the dream scenario for a first lien mortgage someday. We're able to see it for a HELOC, which is a good start. You got to start somewhere.
We're hoping to get there.
Oh yeah.
It's a little trickier, obviously, in purchase, but we're hoping to get there.
Now, is that loan exchange, as I call it, sort of platform you just referred to, is that driven by your blockchain? So is that at all sort of is the architecture supported by Provenance, or how is that?
Yeah, so that's a great question, actually, because I think, obviously when people think of Figure, they hear about blockchain and crypto. I think as far as the HELOC is concerned, that's exactly where it comes into play. Once a loan is created, we essentially take all the information, all the underwriting, the credit pull, all the documents, and upload it, board it to chain. The efficiency that creates is that there is no sort of QC process that needs to take place after the fact, right? Because all the data is in one source. It's almost like, imagine if there was a global Encompass and everybody in the market, investors, other originators, whoever, all had access to the same file. You don't need to prove that it's accurate. You are looking at the record, right? And so what that allows us to do is really add additional efficiencies in transacting loans and moving them from originator to Figure to an investor in a pretty elegant and efficient way, and done in minutes. There's not much to it, right?
So that is trust and transparency. I mean, that really is we've worked on, like Jeremy and I have worked on certain projects in the blockchain realm in the past, and it seems like they've really delivered on what some of these, projects that we've sort of poked around have aimed to try to accomplish. They've really sort of delivered on. Does that sound about right, Jeremy, do you think? Or is there a subtle distinction between what they're doing and what we've seen in the past?
No, I don't think there's very much of a distinction. I mean, the key point that Anthony made that I appreciate is we're trying to solve a problem. It turns out this technology is the best way to solve that problem. It wasn't, Mike's original brand and reputation was to make sure blockchain is effective and adopted, right? But it was ultimately because it's the best way to keep data verified. It's exactly what everybody wants. Yeah. And there's been a bunch of reasons why it hasn't worked on the first lien side, and none of them have to do with technology or blockchain. All the reasons it doesn't work are practical.
I've seen a ton of those too over the last 6 years or whatever. But it seems like almost everything I've seen has been around like trying to replace like title documentation, right? Real estate title documentation. So I think that would be the difference here. Is like it was always like, where do you start? But if Figure is just, we start with our own transactions and putting those in the ledger. That's a lot easier than trying to
in a funny way. It's almost like the HELOC is. It's almost like the HELOC is a proof of concept of that, which Rick started by asking, "What's the strategy?" Where our strategy is talking about this entire ecosystem we've built. I love HELOCs. Obviously, that's what's hot today, and that's what we're doing. But as you can imagine, the applications go well beyond HELOC. That's a small sliver of the market that we're trying to get after. And the other thing that I'd say is that, in order to board a loan to chain and get all the benefits that we just outlined, you have to have a fully digital upfront process that's predictable, right? The two sort of go hand in hand in order to make it all work. And I think that's what we've accomplished. We sort of buttoned it up from beginning to end and made the ecosystem work.
Why, Anthony, why wouldn't you guys buy like in a firm or some kind of like buy now, pay later platform, or somehow, I don't know what you'd use as collateral. I mean, other than just a blanket sort of quick credit screen. But is that kind of a model too far of a stretch of an application, or is that within the ecosystem realm of application? I'm not saying possibility, but is that a realm of application of what Figure could feasibly do.
Yeah, I think it is, right. The direct answer to your question, it's a matter of us prioritizing and having a view of where the market is and what we want to focus on. I don't know if the unsecured space is sort of, top of our list right now, given the amount of mortgage products. But, theoretically, what you said, absolutely, right? It's again, you have an unsecured loan, you take in an application, you have an objective digital underwrite, you board it on the chain, and then you have investors lining up to buy it. So yeah, that could work.
Yeah.
And I think, strategically, that's where Michael Tannenbaum came in and he's got his view of where he thinks the market is and what we need to tackle next. I mentioned DSCR, but as you can imagine, we're not going to stop there. We're going to continue trying to diversify. Yeah,
I was messaging Michael yesterday after our conversations. Anthony, his grandmother is from or lived in and belonged to the same country club that in the same town where we live in Long Meadow, Massachusetts. So it was just a really small circle of relationships and circle of geographic connection, So
you almost got him on this podcast, actually. Unfortunately, at a conflict, I was going to have him come do a cameo and talk a little bit.
Oh, that'd be great. Yeah.
We'll save that for another day.
We'll definitely have to have that because he's kind of a new face into the mortgage scene from a leadership standpoint. And I think that would be fun to do, right? Because Jeremy and I and Brock, we love new people who come from outside in because those are the disruptors or who aim to disrupt existing flows. And they bring new ideas. Now, a lot of them fail at it, to be honest with you, because they're so new and so out of the left field. They struggle in operating within the space. But Figure and Mike has done such a good job in being successful in mortgage origination, because this isn't student loans. This isn't the mortgage product is a far different product than credit card debt, student loan debt, or any other sort of financial instrument. But Mike has just crushed it with his work in origination. Let me ask you a question. So the Homebridge acquisition was not successful. Is that right? That did not end up going through, right?
No, that was predates me a little bit, but that's right.
So did you guys acquire any other mortgage originators?
Nope. This is all homegrown.
So is that something that's on your docket to kind of acquire other mortgage companies to kind of try to build out your first lien strategy, or no?
That's a good question. I'm gonna answer that a little differently. I think, and I'm speculating because this predates me, right? But I think the idea with Homebridge was that, if you can get an originator when we were still up and coming and didn't really have the distribution, it would help supercharge things. I think given where we are now and the partnerships that we have in place, I think that the need for an originator probably isn't something that's critical, right? Because our strategy is very much to work with the originators who are awesome at what they do, have all the strong LOs and branches throughout the nation, and it's a match made in heaven. We're perfectly happy working through them.
You could potentially think at this point that it would be a negative, because then you'd see your existing partners would see that you're incubating a competitor or something.
I mean, there's that perspective, and there's the expense of it, right? I don't know if we need that, especially because, look, what makes an originator successful is the fact that they have a suite of 40, 50, 60, 70 products that they could offer. It's full service to a customer. For us, today it's one product, maybe in a few months it'll be 4 products, but it's not going to be 60. And so, the cost of having originators to do that is difficult. What I would say, though, is that if there is one thing that we're... Go ahead.
Well, finish your thought, and I'll dovetail right on the back of it.
I do think the part that we were likely to start thinking about a little more is, like, it's great that we have the fully automated product and things go through quickly and efficiently and all that, but we are conscious of the fact that any automated system is always going to have more declines than you want. You can automate it and look at all the fringe cases, and we're going to do our damnedest to get as close to 100% as possible. But there is something to be said about having an off ramp to to a human underwriter that looks at something. And so,
sure,
having an originator, having a partnership with a team that can do that might be something that we could look at.
Well, certainly NFM lending would be a great great partner for that, Anthony. And
never heard of them.
Neither have I. Who are they? I heard the leadership's a little shaky there.
I know. No, the leadership is great. Bob and Greg are phenomenal leaders at what they do. But I will tell you,
I was talking about you, buddy.
Yeah, fair. And we don't use Figure today, but I wouldn't mind getting you guys in the mix at NFM, because I do love. I was at cross country when we launched the Figure, and I know a number of other. I've consulted and advised other lenders who've gone on to Figure, and I think it's a great product. It's a phenomenal product, in fact. But you'd think that any automated solution like FHA Streamlines or VA, you'd think those are solutions or products that would really fit in an automated warehouse like you guys have, because it's pretty straightforward, the underwriting guidelines. If you underwrite directly to get Ginny guidelines, this would be a really simple. You'd put FHA Streamline shops really under notice if you guys pursued those products.
Hey, if there's anybody from the agencies on, happy to talk to you guys.
Is it really a delivery issue for them? Is it a delivery issue for them? They have to be able to accept loan data in a new way? What's the major obstacle, in your opinion?
I think they're pretty prescriptive in how you underwrite, what documentation you need. It's not all digital, right? And so it's a matter of looking at how we underwrite a customer and how they do, and converging the two and saying, okay, this is the new standard. Let's go.
Yeah.
And I think,
that would be the purpose for you guys buying a Ginny. You guys buy a lender that's got their Ginny, and then you're able to somehow automate so much more of it than what your standard Ginny does, right? And then you add maybe some of the human processes to close some of the gaps, but at least you can maybe work with Ginny with scale to kind of say, hey, we want to do something. We want to deliver this, but faster, cheaper, better, to serve the constituents that you're aiming to serve, but in a more accelerated way.
That would be dynamite. Obviously, if there's a path there, we would try to do that. I think what we've built already plays well with that.
Yeah, I do too.
But those things move slow. That's not something that we can turn around overnight. But I think for the industry at large, I think that would be incredibly beneficial, right?
Yeah.
Whether it's us or whether it's them saying, here's an automated way of meeting our guidelines, and the LOSs at large can go build that.
Roque, what kind of partnership could NewZip have with Figure in a way that where Figure provides your network with realtors across the country with some kind of a I don't even know, some kind of a rev split or something between NewZip and their participating realtor that ends up delivering it to their respective client because they have a project that they need to do or something to follow. Is that too far off the scope, or what are your thoughts?
It's not too far off. It's probably, it's prioritization, like Anthony was saying about most of these questions. We have begun, NewZip has begun having sort of an optional ancillary marketplace that our lenders can choose to use or not use. If they have their own partnerships, we integrate with those. But for example, on title, on insurance, on moving companies. We're all purchase related, right? So all those things around storage, moving, and really just closing the deal, we're kind of starting to explore ancillary opportunities that we can put in front of all the lenders we work with, and they can kind of say thumbs up or thumbs down, right, at the enterprise level on whether they want it to be in their consumer experience that we build for them. So there's potentially something there, but even more so, We haven't spent a lot of time on like the post-closing experience for our clients, like the actual home ownership experience for our clients. We've spoken to companies in the home improvement space and like the Front Door and like Angie's Lists of the world a little bit about whether we should feature networks like that to all the clients that we work with post-close or to our mortgage partners. So I could totally see that there's some play there, but it's a little outside our core, and would be something we'd have to find the right place for, and I don't know, it'd be worth Figure's time either. Maybe it
could be, like
basic level.
This is what we're exploring, right? I mean, even the house deal, right? I think it took us a while to get to that point, but there's opportunity out there, and we're always open to rethinking the angles to get to that consumer and present the opportunity to them at a good time when they're thinking about their home and what they could do.
Brock, that was a good takeaway. That was a good, we could do something, but I don't think Figure would be all that interested, perhaps, and you drew Figure out. You drew Anthony forward to say, yeah, maybe there is, Brock. That was a Ivy League Bodwin kind of move. There we go.
He's bringing us to him. That's fine. Salesmanship.
Yeah.
For the right deal, maybe we do.
I think we should talk about it at some point for sure. Yeah, no, it's I like the way you guys are thinking of it and how you can fit with it. I mean, what we do is 100% B2B. We operate we're a real estate brokerage that operates in all 50 states, right? But only on behalf of lender partners. So we think of everything that way of like, maybe we already share lender partners, and that could be. I'm
sure we do, and that's the next.
So there's that type of conversation as well. That's even easier. So like that.
We've been intentional. That's the beauty of working with lender partners, right? They're licensed. They're RESPA doesn't really apply. Like we're licensed. They're licensed. There's a way to have an economic arrangement, and we've focused on that, except for large scale enterprises like the Houses of the world, where you can come up with a deal that is worthwhile for both ends.
Yeah.
Jerry, what would be a bolt-on opportunity with some of your tech relationships, do you think, that would both enhance Figure's value prop and would maybe accelerate?
It's funny you should bring that up. So I'm currently working with Figure's partnership team, business development team for one of my companies called Incentifind. Incentifind is a database of all the green incentive energy savings, tax rebates, and clean energy savings at every level of government and private industry that a homeowner can claim. So if Rick goes there and puts in his address, he will see 109 incentives across all different categories. And if you apply for them, you could get $8,500 of savings or $10,000 of savings or $12,000 of savings, depending on what the work is and what you're going to do. So for us, there's two key components. One, it helps the originator and the home improvement folks in the pipeline close more business. It's a better marketing proposition, and it's a good conversion tool to be able to say, hey, you're thinking about doing this, you work with us, we can also get you this report for these savings. It's also a great retargeting tool because somebody can reach out either post-closing or as part of their either lead gen, thank you gift, whatever they want to do to their homeowners and say, hey, here's the report on your house. Don't forget to grab these savings for hot water heater, windows, insulation, EV charger, solar panels, whatever. And we're still working on like a partnership with somebody who can do the cost estimates on a renovation, because that's a big piece. How much money do I have to spend to get some of these savings if I'm buying an EV charger, for instance? But that would be that's one I think about. The other one that I was thinking about isn't related to any of the companies that I directly work with, but is I've seen more and more short-term financing to get the home on the market. There's actually 2 startups working with real estate agents that do those kind of 60, 90, 120-day loans, because a real estate agent will come in and go, hey, you need to do this, this, and this, and you'll get 4x the value for that work if you do it when we list this house. So home listings with short-term financing that either gets paid off at closing or becomes a follow-on HELOC, like a carry-on HELOC after the fact. There's a bunch of different opportunities there that I like. It's just a little bit more short-term return for the investors. It's a different set of investors, which, Figure would have to plug into. But
we've dabbled in that space. It's kind of funny that an inadvertent reality of our product is it's so damn fast that some smart originators started using it as a bridge loan, essentially. Because when a deal's about to fall apart,
I was thinking as you're saying that. Yeah.
Well, so there's two ways to address that. You can either fight it or you can embrace it. And we tried fighting it and lost, and so we embraced it. And so we essentially have we work now to identify whether the subject property is listed for sale or will be listed and ask. And if it is, we allow the loans to go through. We just provide a modified offer and modified comp to an originator. So in other words, if push comes to shove and you want to use this as a bridge, we support that for our partners.
Yeah. Do you guys partner with builders on that? Where they're 6 months from move in, got to hang on to the current home?
It's not huge. It's not really that profitable, right? Because as you mentioned, right, investors, they don't really want a loan that's going to pay off in 3 months.
Right.
So we don't market it per se. I think the approach that we've taken is we'll support it for our originating partners. If it helps them get that purchase loan, the first lien, wonderful. We're not going to pay much on it, but we'll support it. And surprisingly, that's had traction. What the other thing, I know we're just about at time here, but the part we didn't really talk about is another huge opportunity I see is in like first lien HELOCs. There are a ton of free and clear homes where those consumers need to tap their equity too, and cash out refis for small amounts are just not economical, right? So we actually recently launched some really sharp first lien pricing, like as low as the high sixes, which is competitive with agency rates, and we're really getting after that market through our originating partners. We think there's a world of opportunity for that free and clear homeowner that needs 30, 40, 50K for whatever project, and we're happy to do it.
So if I'm an originator, I have to pair that product with some other data source so that I can go out and figure out who even has a first lien, right? Or who has a free and clear property, because those aren't in my database if I'm an originator. Is that probably the best way to think about it?
I mean, that's one way, but there's originators out there that buy leads, and as far as I know, those leads for a $50,000 cash out refi are a dime a dozen because nobody wants them. So,
gotcha. So
there's a way to monetize them.
You got the free and clear, or you've got the replacement of your cash out, sort of. Yeah.
Well, when I said cash out, I meant, a free and clear technically is a cash out from an agency perspective with the LLPAs that go with
a first lien cash out. Yeah. I mean, I guess it would be anyway, but with no current lien cash out. Yeah.
Mm-hmm.
Yeah.
Yeah.
Yep.
So that's the type of stuff we're focused on. Opportunities like that. Take the same product and think about different ways it could apply. First lien's an example. We recently launched a piggyback product as well that, we're trying to just use the same experience and technology that we have to, enable higher LTVs at, affordable rates. Those are the types of things we're doing on the margins outside of our strategic work.
Cool.
Yeah, right on. Well, thanks for being with us, Anthony. I appreciate it. It's great to meet you and talk about this stuff.
Yeah, likewise. This was fun.
Yeah.
Hopefully everybody got value.
And tell Michael that we'll be in touch to get him on sometime in the next few months.
I will do. We've got some exciting things coming, so I bet he'd be open to doing it.
Sounds great. Thank you, guys. Thank you, Jeremy. Thank you, Brock.
All right. Talk to you soon.
Have a great weekend.
Bye.
Bye.